Hello, Jeff Dineski here. Want to come to you with a topic today that I've been asked by a lot of past clients, friends, family, neighbors, and that is two reasons why today's housing market isn't a bubble. You may be reading a lot of headlines and hearing talk about potential housing bubble or even a crash, but it's important to understand that the data and experts tell a much different story. A recent survey by Pulsenomics asked over 100 housing market experts and real estate economists if they believe that the housing market is in a bubble, and the results indicate most experts don't think that that's the case. As the graph shows, a strong majority, 60%, said that the real estate market is not currently in a bubble. The same survey experts also gave the following reasons why it isn't like 2008. Which is the recent growth in home prices is because of demographics and low inventory. And the second is that credit risk are much lower because underwriting and lending standards are very sound. If you're concerned a crash may be coming, here's a deep dive into those two key factors that should help ease your concerns. Number one is the low housing inventory is causing home prices to rise. The supply of homes available for sale needed to sustain a normal real estate market is approximately 6 months. Anything more than that is an overabundance and will cause prices to depreciate. Anything less than that shortage will ultimately lead to continued price appreciation. As the graph shows, there were too many homes for sale from 2007 to 2010, many of those which were short sales and foreclosures, and that caused prices to absolutely tumble. Today, there still is a shortage of inventory, which is causing ongoing home price appreciation. Inventory is nothing like the last time. Prices are rising because of a healthy demand for home ownership, and at the same time, there is a limited supply of homes for sale. Number two, mortgage lending standards are definitely nothing like they were back in 2008. During the housing bubble, it was much easier to get a mortgage than it was today. Here's a graph showing that the mortgage volume issued to purchasers with a credit score less than 620 during the housing boom and subsequent volume in the years thereafter. This graph will hopefully help show one element of why mortgage standards are nothing like they were the last time. Purchasers who acquired a mortgage over the last decade are much more qualified than they were in years leading up to the crash. Realtor.com also notes that lenders are giving mortgages only to the most qualified buyers, and these buyers are less likely to wind up in foreclosure. Bottom line, a majority of experts agree that we're not in a housing bubble. That's because home price growth is backed by a strong housing market. Fundamentals and lending standards are much tighter today. If you have any questions about the real estate market, thinking of buying, thinking of selling, let's connect to discuss why today's housing market is nothing like 2008. Thanks for tuning in.